How you doing, friends? It is the final hour to expiration. It is, well, I'm a little bit late. I'm about 5 minutes late. It's 10 minutes of 3 on Monday, August 8th. And this is where we trade the very final hour of options expiration on the S&P, taking advantage of the daily expirations that are available on both options on the SPX and on the E-mini S&P. Both of them have expirations 5 days a week. Now, Tuesdays and Thursdays are a little newer than Monday, Wednesday, and Friday, which have been around for quite some time. They just added those in May. So let's see here. I just have some comments that I'm dealing with. Well, anyways, if you're in the comments section, say hello. How you doing? Good to hear from you. And I have a small trade that I need to make. We have a trade going on from earlier today, and it looks spiffy. All right, I could execute it right now and guarantee 100%. I'll wait. Let's see what happens. It's already made one trade, brought in 125%. I have another trade on that looks like it's right at about 100% right now. Those are normal numbers for us. Typically, average trade is around 150, 200% return on risk. We are typically looking for that amount or some spectrum between that and a pin trade, which can be as high as 1,000, 1,500%. And that happens about 10, maybe 15% of the time. Sometimes you go through droughts. Sometimes it's like a smorgasbord. So you never know. You never know in the markets what the market's going to deliver for you. Lately, it's been thin. Let me just say that this bear market rally, for whatever reason, has been extremely difficult to trade any kind of options expiration. Now, I don't know if other people are having that same kind of difficulty or not in their regular trading. I've heard that traders in general are having a tough time with this particular market. But it's not really bad. Well, I guess bad is that I haven't, really lost any money. I'm going sideways, making some trades, losing other, making some trades, losing others, and just, So, oh my. I think I have to take this. Let's see. Let's try to get a slightly better price than that. We'll put it in right there. We'll see what happens. Might happen while we're talking. I'm sorry. That was a trade from the service. The trade that we're doing right now is an experimental trade. It is outside of our normal standard operating procedure. We do this quite a bit where we'll come up with a hypothesis, and then we want to test that hypothesis. So we use the scientific method, just like any rational person would use. And that's what this segment, this show, is all about. Now, I committed to doing 100 of these trades. We did it in two halves. We did the first 50 a few months ago, and then, a couple months ago or a month ago, we ended it. And now we're doing the second half. And this is trade number 15, I believe. And so far, we haven't gotten out of the starting gate yet. And we're a little bit down. I think we're down about $100, but that's okay. I mean, once it catches a gear, then it really gets going. We've had, we're at about a 25% win rate out of 15 trades. Now this, don't think too much of that, because this strategy by its very nature has a low win rate. Typically it's around 40, 45%. Sometimes it can get as high as 65, 70%, on really good runs. And we had one run where it got up to like 90% for a stretch of weeks. Very unusual. The thing that you should expect is about 40%, but your return is phenomenal. The great thing about it is that the risk is super small. And so you never really experience any big drawdowns, even with very large consecutive losses. It just doesn't happen. So that's the one benefit of this. The other is that there's really very little anxiety in this trade. And then when you do hit those big ones, it's very cool, but we just move on and to the next one. And so the result is that you don't get a lot of volatility in your equity curve, which is what every trader wants, and you don't have big drawdowns. Drawdowns, even with larger accounts or even with small accounts, never really exceed 10%, usually in the 2 to 5% range, which is like phenomenal. And so your equity curve tends to stair step. It goes sideways and then goes maybe inches up, then a big up, and then sideways, and then big up, and then a big up, and then maybe inches, and, kind of like that. But very rarely do you get a dip down. I mean, you would have to have a pretty extended losing streak, and that can happen in any trading strategy. But it's not like extraordinary. Oh, it looks like I got filled. Yep, I got filled. And I made another 140%. So that's good. 2 trades today, one 125, another 140%. So that's cool. All right. Let's see. We've got anyway, we've got Cowboy. How you doing, Cowboy? And Steven's here. And Dan, how you doing? I can't imagine that that's all that's out there. What are you doing out there? Everyone's been asleep today. The room has been very quiet, which is unusual. We usually have hundreds and hundreds of messages. And it's just, I don't know, maybe it's the summertime doldrums, Everyone's a little hot. That's okay. Let's move on and take a look at this market. And so what we're going to do, now, just so you can see the trades. So these are the trades. In at 70, out at 160, in at 70, out at 175. There's this one other that is still going, but we'll see what happens with that. All right. Okay. Now, being at Monday, we had the markets actually open up on Sunday evening at 6 o'clock in what's called the Globex session. And since that open, you can see it right here. Since that open, we started down a little bit and then just climbed and just kept on going. And then when the European Open came, which is right here at 3 a.m., we got a big boost and a little pullback and then just screaming upwards. On the and then just before the U.S. Open here, we dropped down, consolidated a little bit, and then the U.S. Open, and we just screamed up. Now, here's the interesting part. Earlier this morning, I drew out our market structure. Every Monday, I get online on YouTube and do a volume profile market analysis and annotate the volume profile to show the market structure. And one of the lines that I created was something called an LVN or maybe an LVL. I haven't decided yet. Our nomenclature is a little bit different than others using volume profile. That's mostly because everyone else that's using volume profile is doing it wrong. And so they haven't yet adopted my way, but they will. Anyways, this LVL, we'll call it this low value level. That's what that stands for, LVL. We'll have to come up with a better, like an acronym or something. That's something that sounds like something. All right. But anyways, an LVL or an LVN has this peculiar property. They live inside of volume wells, which other people call low volume nodes, which are like the opposite of value nodes. And they are areas where there's little activity, little trading volume has occurred at those levels. And let's see, we need to, this is very easy to see here. Like you can see value nodes, and then you can see LVNs or low value nodes where there's the absence. They're like the mirror image of a volume node. Now, why do these happen? Well, the reason why they happen is that those are areas where the market has decided to make an impulsive move from one area of value to another area of value, or looking for value, kind of like price discovery, looking for where the market will find value. And when it moves quickly through there, it doesn't deposit a whole lot of trades. So as a result, you get the lack of volume like you see here. The interesting thing about this type of structure is that they become prevalent at all time frames. And those areas of low value are respected, just like the areas of high value are. So for whatever reason, the market has decided which areas they like and which areas that they don't. Now, one particular feature of a low value node is that there is one particular level, just like on a value node, there's the highest level they call the POC. There's the lowest level that we call the LVL, like this little guy here. And for whatever reason, at 41.5375, no one wants to trade that level. Why? I don't know. Didn't do anything to anybody. He's innocent. But that's okay. That has a particular value or behavioral component with it. And when price moves up to it, it's kind of like a doorway. Either the doorway's shut or the doorway's open. If the doorway's open, it goes through, finds the next level of value. If it is shut, then it gets rejected. It goes back to the previous value node. Don't know why or how that decision is made. I'm sure it has to do with the predominant number of institutions and investment houses that are arguing back and forth or fighting back and forth for position, and that's just what happens. Those are the striations that occur. But what we do know is that at those levels, there are an abundance of orders above and below those levels. So almost like acting as a gatekeeper. And it's the same way on the edges of volume nodes. On the edges, the bottoms and tops of volume nodes, it's the same kind of behavior. There are kind of gatekeepers allowing you into the volume node or rejecting you. There aren't as many people rejecting. There aren't as many rejecting. There are more that are here more or less trying to suck you in. And then once you're in there, then you're basically contained within the node. I use you as like the royal you. I mean, like everybody. It's like a black hole. You're in there, and it has gravitas. So from the volume profile, you start seeing these behavioral characteristics that are illustrated by the nodes themselves. And from that, you can develop scenarios and make predictions on probable moves, given price entering that area or that range of activity with a certain momentum or speed or directionality. I call it the price vector. It has direction and it has magnitude. So that's basically how we perform all of our technical analysis. We do not use any traditional forms of technical analysis. It is strictly based on volume profile and this set of characteristics that I just described. and it works fantastic. Finding levels of support and resistance have never been easier. There is no guesswork, none whatsoever, because it is spelled out for you. There isn't some sort of derivative line that you draw and that's where support and resistance might be. No. It is right where the edges of these, or these lines of demarcation that are created in the structure in volume profile. That's it. Anyways, that's the way it works. All right, so we got a few more people showing up. We have Iz, how you doing, Iz? And Tim, howdy, Tim, and Vadim, all the usual suspects. I'm surprised there aren't more. There's usually tons and tons of people. They must be hot. All right, so our first trade today was a bearish trade, and it was, well, as you can see from the yellow lines, those are the scenarios that I drew out this morning. So I'd have to back up so you can actually see where they are. All right, so there are the scenarios. Let's bring that down into, so there were two basic scenarios, S1 and S2. S1, the idea was it would come up to this value node labeled T1 and potentially move outside of that value node and then go all the way to this LVL and then come back. That would be S3. And then S2 would be coming down into this area and then consolidate. So those were the two scenarios that I saw happening potentially, or three scenarios potentially happening today. When we started out the day, the expected move was extremely low. It was only 24 points. I mean, that is super anemic when for the longest time we were up in the 35 to 50 to 60 points per day. So it's remarkable then that price has moved as much as it has today, because let's see, at a low, the range today has been as low as 41.30 and as high as 41.88. So our range has been almost 60 points. Yet the expected move, when you look at every options chain out there or any other statistical measure, was only 24 points. Right? So we moved more than 3 times the expected move. So that's kind of interesting. And when we moved up, it looked like S1 was going to be the scenario. However, I didn't really come up with a scenario where we would get blocked by this LVL, this green line. But it was drawn in there, and that's what happened. It found that the gate was not open, so it came right back down. All right. The S1 scenario that I drew out is a very typical scenario that I see a lot. It's a kind of a pattern where the T1 node is what I call a child node or a small node, and T0 is a parent node. And so when you have this kind of pairing between a parent node and a child node, quite often price will move up through the parent node to the child node and then immediately rebound and retrace back to the parent node. So that was the reasoning behind the S1 scenario. Then, of course, the other scenario was that we would stay within our bounds and stay inside of T0. Now, if we were to zoom out a bit, let's say to 3 hours. And okay. So you can see where the T0 node is. It's prominent. Now, for this trade, I'm thinking that price is going to try to center around the POC of T0, which happens to be on the ES 4118 and the SPX approximately 4115. So that's where I'm thinking that price will eventually end up today. All right, we have another addition here. We have Clayton. How you doing, Clayton? And so that is my best swag If you don't know what a swag is, there's a military term that means scientific wild-ass guess. Because when it all comes down to it, we like to pretend that we have control over the math, but we don't. So we use this pseudoscience to pretend like we know what we're doing, and then ultimately we make guesses, wild-ass guesses, supported by the science. So there you go. That's my swag for today, that we will end up at 41.18 or 41.15 on the SPX. So let's take a look at what that looks like zoomed in. And already we've started to move down there, right? And it gave it up. We have 50 minutes left in this market. Now, got to make a decision here. What are the odds that we are going to move down another 20 points to there? Just because I said so, I'm more inclined to go with whatever the starting POC was, and that would be leftover from Friday. If you remember Friday, we had this big back and forth, up and down, and then we centered. We ended the day right here. And Friday was a good day for us. So the POC of this is 41.45. So there are the two choices. 41.45 is only 10 points away from the current price. It represents the majority of value over the last couple of days, Friday and today. Now, I suppose we could bring in a few more days and see if that would influence our decision at all. And we can see here that the POC is actually at 41.35, which is where we're at right now. So that's taking into account all of this crap. It's a technical term. We can see that, this is a fairly well-distributed node here, but it is kind of choppy. I mean, that's only because there's not enough days here to fill it all out. If we were to take into consideration the 9-day consolidation that we had back about a month ago, right here, back in late or mid-May to mid-June, that's a little bit more than a month ago. For 9 days, we consolidated here, and right now we are kind of revisiting that same area of consolidation. And if we negated the idea that this 9-day consolidation had any kind of stickiness or power influencing us today, then we could just look at the volume profile for what we have here. But when you add this in here, that's where you get that 41.18 and 41.15. So there's our choice. Now, you look at price, and it's just on this mad bear market rally. It's Monday. There weren't any economic reports to speak of. However, Wednesday and Thursday are going to be quite impactful with the CPI and the PPI. So we can expect some more volatility later in the week. Now, we had more volatility than was expected today. So here I am. I'm just talking all over the place, trying to come up with a resolution in my mind. All right? I don't know. I mean, the momentum, I guess, is up, but we pulled back today. Let's zoom out again. Take another look. This is a tough one. I'd have to go with this minor node here as being the most attractive. I was going to say this guy right here, which would put us in almost at that 415 mark, 418. That's at 419. I guess you could make an argument for 420. Price currently is about 18 points higher. So if we went 10 wide, that means we we'd be within range, and we could probably get a good risk to reward. So let's take a look what that looks like. Let's all right. So what we'll do is we'll go to the options chain and look at 4120. Let's take a look at the relative weightiness of the options chain. And if we look at the put side, 4150 is at 35,000. 4130 is also at 35,000. 4120 at 34,000. Now, what about on the call side? Well, we really don't. I mean, we have one here at 4,200 at 39,000, but that's kind of a lone wolf, and it's pretty far away. So I think we have to choose the put side. And 4120 seems to just, be the one. Maybe if we go to 4115, let's see, 4120. Let's see what that will give us. All right, so we get a 9-to-1 risk to reward here with a 5 wide. That's not terrible. It's not great, but it's not bad. I mean, we've taken 9-to-1 many times here. So with this trade, we see the problem is that it's really narrow, right? We could move further out and then widen it up. So let's say we went to 4110. And that's 15 wide. Wow. So 4110, 15 wide. Now, there we get some real appreciation there. Question is, are we going to move that fast? Ooh. And any movement towards it over the next 25 minutes is going to yield positive results. If we get a good move, then we could potentially have a 4x, 5x, possibly a 10x. Well, could we get a 10x? No. We could get almost a 10x. We could get about an 8x as our max. What would happen if we go a little narrower? Now, I'm liking that. 80 cents for 10 wide. That is not bad. That is not bad. All right, what are the odds that we're going to start moving down here? I don't want to put on the trade then have, like it did a few times on us. We put the trade on. As soon as you put the trade on, it starts moving in the exact opposite direction. I mean, to me, this looks like it's setting up to go lower. That's just me. That's what I see. There could be a little confirmation bias going on there. But this all comes down to, I guess it's more or less a guess anyways, right? It's a scientific wild ass guess. It's a swag. I think if it moved up a little bit and then gave us a better price. So right now, that's at 45 cents. Holy crap. I'm taking it. $0.45. Yeah, that's good by me. All right, it filled. All right, so let's go back and we'll get that. And we'll copy that into the room, into the chat. So for 45 cents, potential of $945 profit. I like those odds. I really like those odds. All right, and we got it on a pullback. So we had a move down, a pullback. So maybe we will continue down. All right, you got that, guys? Now, of course, this is what's going to happen. This is the devil on my left shoulder and telling me now it's going to just start climbing straight up and make session highs. All right. Now, to avoid the pattern day trader rule, we're going to do what we call a pattern day trader hack. And we're going to analyze the opposite trade. And instead of a put, we're going to make it a call. So that effectively flattens the trade. All right, so we're going to stage that so that if we do start moving up, once we have profit, we'll just invoke the opposite of the put fly. It'll be a call fly with the same criteria, and it will flatten the trade. That way we don't have to close the position out at expiration. We just allow them both to expire by themselves. And the benefit of that is that it will retain the profit and we won't get a pattern day trader strike. Of course, now it's moving up. See, there it is. It's moving up. So we need to go and zoom in on this. Yeah, what did I say? I said that as soon as I put it on, it's just going to go ripping straight up, right? What does it do? God. You know, all this time it's spending grinding down, and then just when we decide to take the trade, it decides to rip up. It might not, but, you know, we have to add a little bit of flair into this, a little bit of anxiety for this zero anxiety trade. Yeah, I don't know. Now, there is, you know, well, we can't really do it here. I was going to say we could gamma hedge, but it's not going to really buy us anything. It would be chasing. You want to gamma hedge when you have an advantage, and we don't have an advantage. I'll be right back. And I'm back. So we've got 35 minutes to go. There's so much time. I would have felt a lot better if it went in my direction this time instead of going in the exact opposite. All right, so we want to man, we don't have to move very far to get at least some profit. So this is 41.10, 10 wide. Oh, look at that. It looks like the same trade we had on last time, I guess. So there we are, 41.10, 10 wide. Whoops. Yeah, I think a swim charting just leaves something to be desired. Can never. Yeah, I don't like that. That doesn't look as good as this. Plus, we can see the volume profile. How you doing, Mark? Mark has been paper trading these butterflies on Thinkorswim. Yeah. So far on this second half of this experiment, our record hasn't been so great, but we're only down a little bit, down $100. So it's not like it's the end of the world. The first half we were up strong, really strong. So I guess there's a little bit of regression to the mean there. But as we move further and further into this second half of the 100 trade experiment, I'm sure things will start evening out. So Mark said good morning. Where are you, Mark? That it's morning. Are you in Are you in Asia? Is it tomorrow there? Philippines. Yep. I was right. Yes. So it is tomorrow. It's tomorrow in the Philippines. So I think if we get below this little volume node here and break down here, we might have a chance to move down strong. There's about 29 minutes left. Let's see where we are. We still have we have a ways to move. We need to move down about 10 points to get any sort of appreciable profit. I don't know. If we break a new low here, we will definitely be at profit taking time. Hate moves like that. Would love it if it was a move in the opposite direction. But that is the wrong move there, buddy. Turn around. You know what? It's gonna break above here. I can just feel it. It's gonna do one of these curls. It's gonna do the curl. And then break up this way. Curl like this. Yeep. Yeep. I could be wrong. That's what I feel. curl, curl. See, what I'm doing is I'm using opposite side theory. Curl, and then it won't curl. It'll dip. No curl, dip. It's going to break here. Watch, it's going to like jump up like 10 points. Again, using opposite side theory. "24 minutes left." Uh-oh. Jason's committing the cardinal sin. He invoked a technical analysis term. See, I knew it. It was curling. It was the curl. We could get the knockdown, though. So I got to ask Jason. So, Jason, do you really think that all the institutions out there are looking at the 200 SMA and they're saying, man, it hit that 200 SMA, we need to start piling in? Because I can tell you from a person who has been involved in institutional trading, I can guarantee you that never happened. That's okay. You get a pass. See, now, the Swede is just trying to get my goat here because you started it, Jason. Now the Swede wants to pile on. Yeah, we need a good swoosh down here to make this a reality. Let's see. It is 3:39, 21 minutes to go. Hold on. There's a dog at the door. Got to let her in. Okay, dog in the house. Ah, see, I turned my back and it went the other direction. Yeah, this was, let's take a look at the bigger picture here and see if we can get a handle on what's happening here. So we've moved away from this predominant node. There's a small child node. There's the possibility that we're doing this sort of pattern where we come into the major node, follow back up, go up to the child node, and then pull down, but it's just not enough. Let's see. Let's back up a little bit. Well, this is a different picture here. So we've got this node here. Then we have a small volume well. If we break above this node, it's over. We'll end up here, up in the 4150, which was our original call, actually, for the day. But it did exactly what I said. I said, watch, as soon as I make this call, it's going to start screaming straight up. And that's what it did. I should listen to my intuition. Jamie, all you have to do is scroll up. I always post it in the chat. At least I got a good price on it, so. All right, so we came up almost right up to that POC right here. There's the POC. Now we have this other one right there. We got to break down below this. If we break down below this, there's a really good chance, but I don't know if that's going to happen now. I think we're going to break up above and then head back up to this node, which was our original trade of the day. Oh, yeah, I've seen it sell off 50 points in the last 5 minutes. On multiple occasions. They can do it, but today doesn't seem like that day. See, now it's breaking up above this. Once it breaks above this edge here, so once it breaks above this top edge here, it'd be over. Yeah, there's only 15 minutes left now. I mean, look at that. The very last move that it makes in the final hour, and it goes exactly the opposite. I don't know. See, in the first half of the 100 trades, we were trading differently. We were trading much closer to the end. All right. So we were trading, the show didn't even start until 3:15. And then we often wouldn't even take a trade until about 3:30. So then we took a vote in the group and said, hey, what do you think about starting a little earlier? You know, which is a reasonable change up halfway through. And that hasn't worked out at all. Waiting that or adding that extra half hour has not helped. Now, of course, we're only 15 trades into 50 trades. So, you know, it might turn around, but we're not getting the kind of performance we got in the first half with trading much later. I'm just saying. Yeah, so I'm thinking I don't want to switch up right in the middle, though. It is pulling back a little bit. Not much. "13 minutes left." Like I said, if we break above this node here, which doesn't look like much right now, but it's there, trust me, that'd be over. We would start moving quickly up to this LVN or LVL and potentially move through that. So we need to break down below this node and then break down below this node as well. Yeah, it's going to break above. I can feel it. It's going to do it. All right, Andrew says, observations, taking the trade earlier compared to later. Like, that is the reason I'm here. Continuous improvement programs. Yes, that's exactly what we do. I mean, everything that we do, our process is predicated on a continuous improvement process, an agile process. So this whole experiment is all about that. So we tried trading a little later and seemed to have fairly good success. Now we're trying trading a little earlier and not so much, at least so far. I think that the end of day trade has a lot of potential. And we made a lot of great trades, really, in the last 15 minutes in the first 50 trades. You know, that was a big difference. Wow, look at it go. It's got some juice there. But that could be like recoil juice. There seems to be some energy coming into the market here. Adam wants to know Ernie, how do you decide how much historical data to load for the weekly VP analysis? Generally, I want to get as much as possible. I want to get as much historical volume in there as possible. But as you know, when we were on session lows, that was very difficult. When we were at the bottom of the bear market, it was extremely difficult because there wasn't anything there for almost a year and a half. So we had to go back a year and a half. But now I think things are starting to tighten up a little bit, and maybe we can go and just use the past 6 or 7 months. So the answer is you want to use as much as you can. Yeah, Juan's saying definitely better trade later. Maybe we'll switch that up midstream and just see how that works. We'll start at 3:15 and take trades a little later. What I've noticed is that when we start early and we take a trade around 3 o'clock, 3 o'clock seems to be one of those periods where the market likes to do I don't know, not always, but it likes to do a counter move. And so maybe that's the issue, see right here at 3 o'clock. I don't know if we go back and test that, we'd have to look what happens at 3 o'clock. What is the predominant move? And then what's the predominant move at 3:30? Mark says, I noticed on the later trades that you need to hit the target exactly, but great risk to reward. On earlier trades, you can get some price increase if direction moves with you, but less risk to reward. Actually, the earlier trades sometimes have been really outstanding. Sometimes, because you can get a little bit more premium and you can get a better price because you're further out. But I'll tell you, we were getting, in the first 50 trades, we were getting trades where we were making 300, 400, 500% on a consistent basis. Not totally consistent, but fairly frequently. I mean, it was really something. So I got to think that there is some real benefit to waiting and seeing what the attitude of that final hour actually is before you make a choice. So this style of trading is perfect for doing these types of experiments too, because even if you're completely wrong, you still don't lose a lot. That's the one good thing that I can say about it. And you still have skin in the game, so. Yeah, if you were doing 50% with this strategy, you'd be killing it. Last year, I traded strictly the E-mini futures, and I was up around 65% or even higher in some cases, and I tripled the reference account. But you can trade at 35, 40% in this and be very, very successful. But you might, some people might think, well, why don't you just flip a coin on which way to go? I don't know. Is that what we do? Should we flip a coin? Maybe that will be the next experiment, flipping a coin. How's that sound? We'll flip a coin, and if we can get 50%, that would be phenomenal. That just sounds so wrong, though, doesn't it? But it is the truth. You know, if you traded 50% in this strategy, you would be killing it. If you traded 50%, you would be averaging about 250% return on your risk. At least. So JP, are you saying that flipping a coin would be silly? But what if it worked? We only have 4 minutes to go. It's got to make a move right here. This is it. Do or die. Do we have any room to make any profit? Ah, no. Look at where we're at. We'd have to move all the way down here. Well, fortunately, it only cost us $45. Yeah. Well, here, check out. This is my my win rate is 43.5%. And I'm up about 10% in my total trading capital. Just under 2 minutes to go here. So I think that's the change that we'll make starting tomorrow. We're gonna go a little later. We're gonna go a little later, take later trades. One minute. Even if it just did a total free fall right now, I don't think it could make it. And it's going in the other direction. Yeah, that's 4144 was the magic number for today, I think. We'll see. See, notice how the volume profile is moving? Everyone's dumping right here. Everyone's closing their positions. All right. I don't have to look at it. I know it's going to happen. Just listen to the bell. Here comes the bell. Here comes the bell. All right. So that's going to be the change going forward. And we'll talk about it in the room. I think that I think trading earlier was a mistake. I think the reason why some people didn't like trading later is that they felt they were under too much pressure to put the trade on. So they wanted to move it back a little bit. And that's why we did it. But that isn't helping our trade record. So we're going to move it to 315 going forward. Well, how come I didn't hear the bell? Oh, well. No bell. But the one thing that we're not going to do is we're not going to flip a coin. We'll do that for
returning visitor.
We'll do that for the next 50. All right, we'll flip the coin on the next 50, and we'll try that for like 25 trades. What the hell, you know? I mean, how bad can it be? So again, we're going to start at 315 tomorrow. This brings us down to 3 out of 13, which is a relatively low win rate. But we're only down $145 trading this. This will be the 15th trade. Now, just think about that. 15 trades, 10 losers, 3 winners, and we're only down $145. So there's something to be said about that. Eventually, we're going to catch we're going to catch something. We're going to catch a gear and start going. Even if we just go back to what we were doing before, that would be phenomenal. We'll just, hopefully just take off. So, yeah, I think this is proof positive, not proof positive, but it is, maybe I'm just, all wet about how I choose the trades, but it seems to make logical sense when I go through this, based on the market structure and so forth. But there's something about that first 10 or 15 minutes of the final hour where it does the opposite of what you think. So we'll go back to trading a little later. Most of our trades will probably come on at 3:30 or later, and then we'll go from there. All right. Then you don't also have to hang around as long too, and listen to me droll on. All right. And maybe we'll come up with some more new some new music or something. But I like this music. You like this music? I like it. I want to say thank you, everybody, for showing up and bringing in your best ideas. Peace to you all. And we'll see you tomorrow. Have a great night.